Ladies and gentlemen, federal employees, today we're talking about how you as a federal employee can pay $0 in federal income tax. But today, I'll let you decide for yourself if what it takes to get there is actually worth doing. And we'll talk about the things you can do just to reduce your taxes overall as well. Now, if you are new here, so good to have you. If you are a federal employee looking to get the most out of your retirement, you are in the right spot. So let's dive right in. So really there are only two ways in this world to not pay federal income tax. Okay, number one, you can have income under the standard deduction for the year. Okay, that is option number one, and we're going to talk about what that is. Option number two, though, is you can go find a really nice desolate cave somewhere in Central America and get rid of all your income and never pay taxes. If you just leave the world as you know it, right, and don't have any income at all, live in a cave, then potentially you could not pay taxes as well. So most of you are probably looking at option number one when it comes to trying to reduce your taxes or eliminate your federal income tax as much as possible. Let's talk about what option number one is all about. So every year, the government has what they call a standard deduction where everyone doesn't pay taxes on the first certain amount of what they make. So for example, in 2024, if you're a single person and you file your taxes as a single person, the first $14,600, again, that's the standard deduction for a single person, the first $14,600 you make, you don't pay any federal income tax on, okay? Now, if you are married, the number is $29,200. So if you file a joint return, the first $29,200 that you and your spouse make is not taxable at all. So in a simple way to think about it, if you keep your income under $29,200 as a married couple, boo la la, you got there, you are not paying any federal income tax. Okay, so that's all it takes. You just have to have income under $29,200. Now, one thing I'll add is some people do have higher deductions than this, and that happens when people itemize their deductions, but you have to have deductions that are itemizable above this amount, which most of you here, these are you're gonna take the standard deduction. Most people don't have itemizable deductions above this. So if you don't know what itemizable deductions are, you're gonna probably be looking at this, okay? So long story short, as federal employees, you have an incredible blessing of having lots of income, right? You've got your pension, right? You got your pension, you've got Social Security, you got your TSP, you've got all kinds of different income, maybe the first supplement, you got all kinds of things. So the odds of you having income above the $29,200, the good news is you probably will, right? The vast majority of federal employees have income way higher than $29,200 in retirement. And so guess what? You're going to owe taxes. Now, the good news is taxes are not bad, okay? Taxes are not bad. If you're paying a lot in taxes, that means you have a lot of income. And I don't know about you, but I like income, right? I certainly like to reduce my taxes whenever I possibly can. However, taxes themselves are not bad. Now, overpaying taxes or making dumb mistakes to pay too much taxes, yeah, we don't want that, okay? We don't want that. We want to make sure legally we pay as little as we reasonably can. But guess what? Here in America, if you make a lot of money, you're gonna pay taxes. It's just the way it is. Now, here's the deal. When we're talking about taxes, we want to make sure we understand all the different types of taxes that are out there, okay? So there is state income tax, right? So far, we've just been talking about the federal income tax, but there's other types, right? There's state income tax. The best way to not pay state income tax is to move to a state that doesn't have an income tax, right? The Floridas, the Texas, the South Dakotas of the world, they don't have an income tax. I believe there's 14, 15 states in the U.S. right now that do not have a state income tax. But even if you somehow do get your taxable income under, let's say, $29,200, whatever it may be, what about sales taxes? Anytime you go buy something, you're paying taxes. What about property taxes? If you own a home, you're going to be paying property taxes 9 times out of 10, okay? So long story short, my only point of this video is, look, to avoid taxes completely is almost never worth it, okay? Almost never worth it. However, there are things you can do to reduce your taxes, which I've actually got other videos where I go into some of those strategies about maybe looking at if you're charitably inclined, there's different things you can do there. Or there's Roth conversions, getting money over to an after-tax account. It can make a ton of sense as well. So there's different strategies, which I've actually got other videos on that will go more into depth. But today I just want to talk you through that when people talk about taxes and things, just remember taxes aren't bad. Paying taxes isn't bad because it means you made money. It means you're not in the poorhouse, right? However, it's just a matter of how can you reduce your taxes as much as you can in a reasonable way that makes sense for you. Okay, so I hope that's helpful. You guys have a great rest of your day. I'll see you guys next time.